Hey everybody, welcome to Chipstock Investor. Nick here today. Due to popular request, we are covering Axcelis technologies. Let me run through our key points with you to kick this discussion off. First, we're going to talk about how this part of the semiconductor industry, especially exposed to power chips, automotive and industrial chips, especially automotive, the downturn is definitely getting worse before we expect a recovery, maybe the beginning of a recovery later in 2025. How bad can it get for Axcelis Technologies? We'll talk about that. And then I know a lot of you are looking at this thing and thinking, wow, ACLS stock, this thing is super cheap. Is it actually a value or is this a value trap? Are you trying to catch a falling knife? Let's break it down. So as you hopefully know by now, we actually already did an update on Axcelis Technologies before the Q4 update when we talked about on-semi and air test systems. And our view has not changed after this Q4 report. But let's run through this anyways. Our personal auto, industrial, and power basket of stocks includes on-semi, microchip, and monolithic power systems. For more discussion on what we're buying in this basket right now, check out Semiconductor Insider, the link in the description below and right here on screen. Add a lot of value to our members over there. Great community of long-term business owner mindset investors. Check it out. But if you drop below that main part of our basket, we also have our small bets basket for power and sensor chips. Now, we've kind of stilted towards air test systems and Axcelis over the last couple of years, but those are very tiny positions, and we've been pretty clear that we have put buying any more of those on hold. What we did add to back in January was a very small starter position in Allegro Microsystems. Again, more on that on Semi Insider, but let's talk about Axcelis Technologies. They're in the middle. Small cap business back under a $2 billion market cap. This is a very tiny specialist that participates in the wafer fab and packaging equipment part of the semiconductor industry. They make specialized type of equipment that semiconductor manufacturers need to make various chips, especially power chips. That is Axcelis's primary end market, companies that make power chips. What is an ion implantation machine? Well, we've used this series of little videos in the past. If you think about making semiconductor wafers, sort of like baking a cake, it starts to make sense what this is. If you think about the raw silicon wafer as just your base cake, obviously that's not going to be much of a hit with your customers. So you probably want to add different layers of icing or cream filling or something like that. I think of an ion implantation machine like that. And the reason why a company might use this, add these extra layers into or on top of the raw silicon wafer, is it helps alter the electrical conductivity of the ultimate power device. This includes in some newer applications like silicon carbide or SiC, which of course is used a lot in electric vehicles. That is the growing part of the auto industry right now, even in 2024, not a great year for the electric vehicle market, but silicon carbide production has continued to ramp up. And it looks like the sale of EVs is back in growth mode again, especially in China. So you might wonder, this sounds fantastic. Why wouldn't these companies be buying more ion implantation machines from companies like Axcelis? Well, after a couple of years of rapid expansion of these chip fabs for especially power chips, and in particular in China, we're now in a period where these companies need to digest that new fab capacity that they've built. They don't need as much equipment as they needed the last couple of years as they were building those fabs and scaling them up to production. So we've been talking about this U-shaped recovery coming for the auto, industrial, and power chip segments of the semi industry after a pretty horrific 2024 for a lot of those companies like onsemi and microchip. We're back. The hope is that we will be coming back to more robust growth by the second half of 2025. However, For a company like Axcelis, you notice the timeline there on the bottom is a bit different. Rather than sales ramping up the second half of 2025, it looks like it's going to be a bit more gradual. Perhaps growth doesn't kick back into high gear until 2026. And the reason for that is those fab customers are going to want to make sure that their production of new power chips is up and running and they're able to fill the demand out there with their current supply before they expand any further. Axcelis sales of equipment, of ion implant machines, is going to be down in 2025, and we won't begin to see a recovery until later in 2025 and perhaps a more robust return to growth until 2026. And so while some parts of the auto and industrial end market are indeed in recovery, like, for example, monolithic power, which just had a fantastic closeout to 2024 and a pretty good outlook for the start of 2025, specialists like Axcelis are still waiting for that recovery. There is a bit of delay. This is probably the cheesiest visual Casey and I have ever made for you here at Chipstock Investor, but I hope it gets the point across, is another way to think about Axcelis's position in the supply chain. We borrowed this concept from the oil industry, where you have upstream companies that are involved in exploration and maybe drilling of oil. And then downstream talks about the actual end market where fossil fuels are distributed to consumers. We can use this thought of upstream, midstream, and downstream supply chains for semiconductors as well. And Axcelis is one of those upstream companies. They supply equipment that companies that make chips need. And so the cycle is going to be a little bit different for Axcelis. They're not going to be able to sell more equipment until their customers, they're in the midstream companies, the companies that actually make power chips, need to expand their chip making capacity. And that in turn is going to be dependent on the demand for things like, let's say, auto parts or industrial equipment, things that power chips go into to help operate the equipment. So there's been this upstream effect on Axcelis where they actually had a pretty decent 2024. They continued to report just a slight decline in revenue and profitability, but overall, things held up pretty well for them, even as many of their customers began to report this deterioration in sales and profit. But the cycle has finally caught up with them as those inventories continued to stay elevated and backed up for power chips. Now the downturn has finally come for Axcelis. Their customers are saying, we have enough equipment for the time being. So let's get into how bad this could actually get for Axcelis. There's some really bad news, but possibly some good news here. Their outlook for Q1 2025, $185 million, and management expects that number to be about the same in Q2 2025. So first half of 2025, we're looking at maybe somewhere in the ballpark of $370 million, which is down significantly from 2024. On an annualized basis, we're looking at something like a 25% decline from 2024's revenue levels. And then, of course, whenever you have falling revenue, there is the possibility of operating leverage working against the company. In this case, as revenue declines, profit margins are going to decline as well. Now, management did say on gross margin, that should be the trough. Things will begin to uptick again on gross margin, but gross margin doesn't pay the bills. On operating expenses, the company is investing in research and development. They're trying to get their ion implant applications into more different types of chips like memory and logic, not just power chips, and that is costing some money. So they actually expect operating expenses to remain the same as they were in 2024. And so with the reduction in revenue, but operating expenses remaining about the same, we're going to see a big decline in sales. And so here you can see our visual from our friends at finchat.io. You can see the big decrease in sales there on an annualized basis, let's say at an annualized run rate, 740 million in Q1 and Q2 2025, down from over $1 billion in revenue last year. So we're looking at a pretty sizable, perhaps 20%, maybe more revenue decline for full year 2025. Thanks to FinChat for getting the data uploaded on Axcelis Technologies really quick after the Q4 update. FinChat is a fantastic platform for analyzing businesses from all over the world, in the US, in Europe, in Asia, you name it. FinChat has you covered, and great tools in there like key performance indicators or KPIs on businesses that help give you a great visual of how the company makes money and can help you project where the business is headed in the future. Check out the link below, finchat.io/CSI. You can get 15% off your own paid subscription to finchat.io. One more visual here from FinChat. We still have revenue charted out for you here through full year 2024. At this time, the red line, earnings per share on a GAAP basis, and then the green bar, free cash flow. Now, remember, I said because revenue is coming down, but operating expenses are expected to remain the same in 2025 as they were in 2024, you can expect to see a sizable decrease in Axcelis's profitability. This is operating leverage working against the business during the down cycle. So we do expect earnings per share to come down significantly because of this, and probably we'll see some pressure on free cash flow as well. Although at this point, we do expect Axcelis will remain profitable, and the company does have a small share buyback plan in place. It would appear management thinks a good use of its free cash flow right now, and the more than 500 million that they have in cash on balance on their balance sheet, that good use for that cash is repurchasing their stock. Could be a good indication that they do see better times ahead. But let's just run this through a reverse discounted cash flow to see what gets us to a fair value today based on the stock price of $60. Let's assume that is fair value. What type of assumptions are baked into the business right now that gets us to that as a fair value? So we're just plugging in $2 per share, GAAP earnings per share, as our preliminary estimate for 2025. The reason for that, if you go back and look at management's estimate for earnings per share, they said in Q1 to expect about 38 cents per share. And then if we assume that stays steady in Q2 because the revenue is expected to be about consistent, that puts GAAP earnings per share just shy of 80 cents for the first half of the year. But then they do expect revenue to begin to rebound and to be better the second half of the year. So perhaps we see profit come up a bit. So we just plugged in about 60 to 70 cents per share on a GAAP basis for Q3 and Q4. And that gets us to that roughly $2 per share on a GAAP earnings basis for 2025. Now let's assume that the business does return to more robust growth in 2026 and 2027. Let's say 25% average in each of those 2 years, and then a terminal growth rate of 5% after that, discount rate of 10%. That's what gets us to $60 per share, fair value, $60 being the stock price for Axcelis as of this recording right now. Now, the question for you as an investor is to take a look at these assumptions, play with them a little bit, put in your own assumptions, and see what gets you to fair value right now if you want to use a reverse DCF method. And then it's up to you to decide if this is a reasonable bar to clear for Axcelis Technologies. Honestly, after the stock coming down as much as it has from all-time highs, you might think the stock would have a lower bar to clear than it does. Earnings per share growth of 25% for 2 years in 26 and 27. It's definitely doable if the company does indeed return to growth, if demand for power chips, including silicon carbide, and if some of those other end markets like memory and logic, as well as vision, sensor chips, cameras for smartphones and cars, if those markets continue to increase and continue to grow, it's doable, but it's not exactly a low bar. My fear here is a lot of investors are taking a look at this and saying just a single digit trailing 12-month price to earnings ratio on Axcelis and are continuing to jump the gun on this thing and buy the stock, assuming this is dirt cheap. And it could be, it really absolutely could be a fantastic value. But until we get a clear line of sight on this company returning to growth and profit margins beginning to increase, I think there is a strong probability that this stock really struggles to find any positive upward momentum. So, much like we talked about with Air Test Systems and some of the other companies in our power chip basket, we are playing it safe and we are putting these on hold for the time being. We'd like to see at least one more quarter, if not two, to see if we are indeed going to return to growth the second half of 2025 and maybe even get a little commentary that indicates 2026 is going to be as good a year as some of these companies are hoping to have and are betting that they will have. We're playing it safe, we're being patient, and in the time being, if we do allocate more money to our power and auto and industrial basket, it's probably going to go towards monolithic power for the duration of Q1 2025. Again, check out Semiconductor Insider for more information on what we're buying and why. And thanks again to finchat.io for helping us out with our charts and our analysis of Axcelis. finchat.io/CSI to get 15% off your subscription. Hit the like button on this video, subscribe, hit the alerts button so you don't miss a video. We have more updates coming for you real soon. Take care. Till next time, everybody.